So if we summarize our performance measures for year one, we had net income of $3,000. We had cash flow from operations, or CFO, of $8,000. And then what we call accruals, or estimates, is the difference between net income minus cash flow from operations. So in our first year, we had negative accruals of -5. We're going to come back and talk about those accruals in our next class. So one thing I want to point out to you before we move on much farther is we're using the balance sheet equation. So as we just saw, the balance sheet equation for the transaction, the owners contributed $24,000 in cash. As we see, cash goes up as part of total assets, and we see contributed capital goes up also $24,000 as part of stockholders' equity. Now, historically, accountants have used a journal entry system that has debits or credits. So the journal entry for the transaction, the owners contributed $24,000 in cash. Was cash goes up, it's a debit amount of $24,000, and then contributed capital goes up, it's a credit amount of $24,000. So this is an older system that you'll see people using some days, but notice that you can sort of map them directly into the newer system that we're using. The reason that we use our system, the balance sheet equation, is the balance sheet equation is very friendly with Excel spreadsheets, and you can use an Excel spreadsheet to do your accounting in a very transparent way, whereas if you try to do this with a journal entry system, it becomes more confusing. So this is not on the exam. We're going to be using the balance sheet equation system throughout the whole semester, but I do want you to understand that there is this alternative system, which is debits, credits, and journal entries, as an aside. Now, takeaways for this class. So we started off by discussing some accounting definitions. We introduced 3 fundamental accounting equations. So our friend, the balance sheet equation, the net income equation, and we also introduced the retained earnings equation, which, as you remember, says beginning retained earnings plus income minus dividends equals ending retained earnings. And then we came up with this idea of accrual accounting that we're going to look at more deeply in the next class or two. But the whole idea of accrual accounting is we're trying to measure performance regardless of when cash comes in or cash goes out. So over the course of this course, we're going to use the balance sheet equation as our tool to understand the impact of transactions on financial statements. And at this point at the end of this class, please practice some transactions. Please do your homework. You should be able to easily identify what's an asset, what's a liability, what's a shareholder's equity. And you want to become comfortable with accrual accounting and comfortable with entering balance sheet equation entries.